Chad, when you think about what makes a ranching operation genuinely resilient and not just surviving from day to day, but actually strong in your lifetime of experience and also the insight that you've had from one generation to the next, because now you're into the fourth generation and hoping to pass it off to the next generation, which will be the fifth generation. Where does financial control fit into the picture for you?
Oh, that's a loaded question, Winnie, but planning, being able to plan and budget and making sure that you're prepared for the risks that are in our business. We've got a huge amount of risks, whether it be weather, markets, politics, border closures, that type of thing. We've got to make sure that we're ready for that. And so having the tools available to us and utilizing those tools is very important in Crystal and I's business, whether it be risk management or money management or that type of thing. And just the people that you associate with, like yourselves, who are very knowledgeable about what you do and have helped us immensely going forward with a lot of our financial planning.
Yeah, thank you for that. In our last episode that we had a chat, you talked about how you and Crystal endured very early on as you were just building your business, what you had to endure, like the BSC.
BSC, yeah.
Yeah, and I kind of remember that it being in the news. It was such a huge thing for so long. But I can only imagine what it was like, because when the subprime market hit when I was a real estate investor, it took me so long to recover from that. And it was tough on the relationship I had. In fact, I'm not even in that relationship at the time, but that's how hard it was on our relationship, let alone like what you guys went through. So I'm sure at the very start of your business, that probably shaped how you are with your finances today.
Well, yeah, absolutely. We started in the business in 1999 and shortly after we were married, with 14 cows, I think it was, and then grew from there. And we were growing in 2003 when BSE hit. We had bought a bunch of cattle into the feedlot the fall before. And BSE was announced in May of 2003. And the markets were just on the incline then. And so we were looking forward to maybe some profits for a change. And all of a sudden, they were worthless. And so,
what were calves selling for before BSE?
I think steers $1.21 a pound was looking really good at that time, and we were looking forward to that. And so that hit, and we had to make a lot of hard decisions. What do we do? Do we just get out and cut our losses, or do we stick with it? And we decided to stick with it. It was some really hard times, and it lasted hard on our business for probably 20 years. But what it did teach us was to be efficient, and our cows can be efficient, and we can make our cows work for us. So we implemented, so winter grazing, those types of things that would cut our costs, and realizing that feed costs were our number one cost. We could work on that. Cow depreciation is our number two cost. We can get creative on ways that we market our cull cows to add value to our cows. And so moving through that, I think, taught us a lot of lessons in business that we can do better. And status quo is not always right. So let's look at ways we can grow our business.
Mm-hmm. So that's interesting. Status quo isn't always the best way. So that tells me already, I already know you, but if I didn't know you, that tells me that you are willing to think outside of the box. So where did you hear about farming without the bank? And how long did it take you to be like, hey, that's something I want to look into?
So I was actually trucking cattle. I was driving a semi and I had the Working Cows podcast on. I think it was an hour or two drive with a load of cattle. And Mary Jo Herman was on the Working Cows podcast, and she was talking about the infinite banking concept. And it just hit me. And at that time, we were pretty deep in debt, and debt servicing was tough. Crystal once said we were paying $250,000 in interest that one year, and heck, we didn't even make that on the operation. So we're paying the banks more than what we're making.
And they took none of the risk. They took none of the risk. That's right. So I'm a ag business major, graduated out of the University of Nebraska, and so I understand finance. And when I heard the compounding out of Mary Jo Herman, that hit me, and that we could collateralize our death benefit moving forward and utilize that, it got me really interested. And so I did reach out to Mary Jo Herman. I think I talked to her personally, asking how I could get involved, and she gave me Winnie's name, and it's all history from there.
That's so funny. That is the same way that Reed and I became. Working Cal's podcast, he called up Mary Jo, talked to her, and sent us to Winnie. And then the rest is, history. But it's so many people.
Yeah.
And you've taken it to the next level.
Yep.
Yep.
Yeah.
Yeah. And yeah, we get to take it to the next level together. And I'm so happy because it's like, I think my compassion and my desire to heal the financial divide and my ability to listen and just really empathize with people takes me quite far in terms of really connecting with anyone that I speak to. There is also something to be said for teaming up with Lacey, who is in the industry that really does take it to the next level. And it just is so awesome in so many ways because Lacey and I quite often talk about it's like, yeah, we're same, but different.
Yeah.
Yeah. And we're different and same in all the right ways. So whatever.
Yeah.
It's all good.
Yeah. Yeah. So $250,000 in interest to the bank.
Ouch.
And I would say more producers than not, that is their situation.
Mm-hmm.
Oh, absolutely. Yeah, we're a debt-heavy industry for sure. You got to worry about working capital and those types of situations when you are that debt-heavy. But in order to grow and survive, we had to do that.
You had to get things started. You had to actually get through the process of qualifying because you can have all the money in the world, maybe absolutely no debt. Maybe your operation is in perfect condition, but it doesn't mean that everyone gets to do this. So It actually took a little bit longer because you have to be in the right situation with underwriting to make sure that you're in a place where the insurance company can actually underwrite your house and your lifestyle. And thank goodness you qualified.
Yeah, I always say, having a life insurance policy is a privilege.
Right. Yeah, so we qualified in 2019. Went through the process, and of course, I had to sell Crystal on it that this is important, and she bought in real quick on that. And if we remember back, 2019, COVID, 2020, 21 were the big droughts in Alberta and Saskatchewan. Buying feed, selling cows, whatever you could do to survive. It wasn't an ideal time to start a process like this. And so off the start, we didn't probably utilize it like we should have, or maybe didn't know how we could exactly. And I think that's important. Even though that maybe things are tight, you can still utilize this and help it grow. And we didn't understand that off the start. But at first, we were just making our premiums and keeping it active and not utilizing the deposit options like probably we should have. But as we're getting more margins in our industry now, it's a lot easier to do that. But like I say, we probably could have topped up our deposit options if we would have managed our business properly and been able to utilize that compound growth right from the start. And it would have changed probably a lot.
We quite often hear when people start really going down the rabbit hole, what is this? What can it do? What's possible? And then it's like, well, number one, how come not everyone's doing this? Number two, it's like, I wish I knew about this way earlier. I wish I knew about it when I was younger, or when I started, or I wish my parents started this for me.
Yeah.
That's exactly right. I wish I'd have started at 25, not 50. And so we've set it up for our daughters too, because I'm just excited for them when they get to my age, what they'll have built through this. And so that's great. And what we've learned is it's pretty easy just to pay the policy first, and then we can work out of the policy for our expenses out of our business. And we've even, for our mortgage payment and stuff, when we sell our calves, the money goes into the policy, and that can sit there and grow until our mortgage payment is due. And we got the money there ready, but it's growing and it's compounding as a result of that.
Right. So that was going to be a point I was going to cover is after you've implemented infinite banking, who gets paid first? Well, you just answered that question. You're paying yourself first, and the bank is getting paid second. So you're funding your policy. It's building a death benefit. It's building a pool of capital that you're able to operate on, but you're also paying the bank. That alone in itself just feels like a win. Looking after myself before I'm giving them their cut, right?
Oh, it's so exciting.
And I think that's huge. Yeah.
And with the same dollar, you're also ensuring that upon you graduating to heaven, you're also looking after your family.
That's right. And we're also working on our retirements and that type of thing for Crystal and I too. And we've got a plan through Infinite Banking to be able to retire using IRPs and what have you to loan against the death benefit to retire on. And we want to make sure that our debts are paid and the taxes are looked after and that type of thing for the next generation. But then we can loan against our death benefit after that and retire on it. And that takes a lot of stress off.
Yeah. We also want to make it known too. It's like, this is a lifestyle. I mean, it does take some focused attention and some different habit changes about how you think about money in order to make this a reality.
That's right. That's the biggest thing that we had to get over is we had to pay ourselves first and make sure that you do that. And yeah, once that's done, then you can pay your bills or your mortgage or whatever else out of that money.
I think that's huge, saying that's a hurdle to get over is paying yourself first. I mean, we're deserving of it. Everybody is. I mean, everybody earns their money in a different way, but we're deserving of that paycheck that we earned by doing, that sweat equity. And so getting over that, hey, you deserve to be paid first. So we're going to show you a way that you can create wealth, preserve wealth, and pass it on to the next generation. And not necessarily, some people say, well, I don't want to pass wealth on. I don't want my kids to be rich when I die. Maybe some people that is what they want. But how can we sustainably pass on the operation to the next generation without them having to take on a massive load of debt again? And if we can set that up for them now while also building our life, like, man, sign me up.
Yeah, and that's the fun part about this is, if you train yourself that the money flows through IBC, that money's working for you, then you take it back out and utilize it. It's still compounding even though you're using it. So it's compounding, you're using it in your operation. It's just a wonderful concept.
The infinite banking concept is the thought process, it's the thinking, and the policy itself, like a specifically designed dividend-paying whole life insurance contract, is the vehicle that is used to drive the thinking. So just wanted to clarify that for anyone listening.
Chad, do you have advice for producers who are looking for more control in their finances? Somebody who's on the fence, like, oh, is it a leap I should take?
Yeah, well, looking forward, it's a tool that we feel is very important to us as we move into the ends of our career and looking at retirement. And it's just a way to build wealth and look after the next generation. And I think it's really important. One thing that we've really enjoyed through the relationship as well is in the past when we've bought life insurance, it's been one sit down at a table, we write the check, and you never hear from them again. That's not the case with Winnie and Lacey here. We meet monthly and talk about strategy, and you've helped me out with a lot of different situations financially in our business with advice, and I haven't gotten a bill for that. So, that's much appreciated. Having that ongoing relationship with you folks has been huge.
Thank you for saying so. Really appreciate that, Chad. And you and Crystal are just such a pleasure to chat with every single month too. So one of the things that I did want to make sure we asked is a lot of people feeling like there's a lack of control, whether you're in the industry or not. It's frustrating as humans not to feel like we have control, especially for the things that we just can never have control over. And then plus we don't make the rules when we have to borrow money. And in the agricultural industry, it's like the bank and the agricultural industry, it just seems like for so many decades, even centuries, it just seems like, they're kind of really married, right? Like that's the general norm. And when you're looking to break up that known partnership or that known thought process, well, if you're going to get into the agriculture world, it's just normal that you're going to end up dealing with the bank because that's the way it is. But then there's that lack of control on that side. In our last episode that we just did, which is another layer of lack of control, how do you feel that the infinite banking concept is something that you and Crystal wanted to do based on that frustration of lack of control in those other areas?
Yeah, for sure. We've got a long history with lending institutions. We had a banker for 20 years that was just wonderful and treated us as a partner. We had others that were not. And in fact, they offered advice in our operations that would have been hugely detrimental if we'd followed their advice on how to manage our own business. And so we've got some hardships there really. And to have that money built up in the deposit option, to have some control, to be able to use that if needed in different circumstances. And not to answer anybody about it. If we need some money out of there, we can take that out and utilize it in our business. And we're very strict about making sure that we pay that back. And so as the money comes back into our business, it flows through the deposit options and pays back those loans. And so it continues to compound that way as well. So freedom and peace is what we see.
Yeah, I like that. Freedom and peace. And, just to speak to a little bit of what you guys have done, your policies were started back in 2019. And over that course of time, you guys have built a 6-figure pool of your own capital that you're able to access at any time with no questions asked for whatever you need it for. And I'm not going to disclose any more details, but if that piques your curiosity, how did Chad and Crystal do this? You can do it too. And we're here to guide you. But that alone just speaks so much volume for the choices that you have now and your ability to act on opportunities when they come up. It's huge.
And on your terms.
Yeah, that's right. It's just having that there. And it'll continue as we get to this level. I'm confident it's gonna grow fast as our deposit options grow and the abilities to top up at the cash value. That will grow really fast now. And so it's just going to keep compounding and getting better as we move along. And we've been through some challenging times in our industry in the last 7 years that we've been in it. And I think it's going to be real positive.
Mm-hmm. I'm confident it'll be more than 6 figures down the road for sure. And being able to operate. We have some other clients, same thing. They built a 6-figure pool of capital that they're able to operate on, where before they were paying, it was somewhere around like $90,000 of interest to the bank every year. And they're operating on their own money now. And it's just incredible. And, I think a lot of times it's like, oh, sounds too good to be true. We get that all the time. But I'm here to say it's not too good to be true. If you're willing to think outside the box, if your why is big enough and you're willing to put in the time and the dedication
to learn about this, it's not fast food.
No, and to speak to that too, Winnie and I always say, this is more like smoking a brisket than heading through the drive-through. It's taken you 6-7 years to build that pool of capital, but we often talk about that capitalization period in our meetings with clients. You have to be patient and give it time, because once you get through that capitalization phase, it's all uphill. It's all great, because that's where that freedom and peace comes.
That's right. And to meet our goals, we're looking at we'll be hitting 7 figures, I would think, within not too long a time for retirement and that type of thing. We'll be utilizing that. It's been great to utilize that.
Absolutely. So, we've totally covered so much ground in these 2 conversations, from regulation to resilience, from external control to financial sovereignty. If you could leave our listeners with one idea that you wish more producers were thinking about right now, what might that be?
Well, I guess as we're in a time in our industry where there's some margins, and we haven't seen that in my lifetime in the business, some substantial margins. Let's take a look at our businesses, and let's look at tools like this that we can utilize and make sure we set ourselves up for the future, for if a downturn happens, that we're ready for that, and that type of thing. Utilizing tools like that, I think, are like this are very important.
Yeah, I'm glad you spoke on that, because I was meant to ask you about, we're in the good times now. What's your advice on preparing for those bad times?
We've engaged with a financial firm, I call them our CFO, to have a third party on our business, third party eyes, to just see where we can do better and how we can protect ourselves going forward, manage risk. They have my strategic plan in hand, and they're working with us on achieving those goals and that type of thing. I think this is the time now when we can set ourselves up for the future, even if there's tough times going forward.
Yeah, and I think that's awesome that you and Crystal take the time to develop that strategic plan, because I would say more don't than do. And I really respected that when you shared that with us. It's inspiring and it shows your dedication to your business. So I commend you for that.
Yeah, it's a tool that gives us direction to sit down together, set out our goals and our direction, and then share it with our employees so they know that this is what we want to do, and then review it. It's too easy to sit on the desk and not review it. So have a look at it once in a while and review it amongst ourselves.
Okay, so we've covered a lot with learning something new and being willing to put in the effort and the time. You can create freedom and peace for yourself, as Chad said. So thank you, Chad, for being here with us, taking time out of your busy schedule. You know where to find us, guys. YouTube, iHeartRadio, Spotify, or Apple Podcast. And your first step is reading the book that Chad was talking about, Farming Without the Bank. You can head over to our website, rancherway.com. You're going to pick up the paperback copy, and it comes with the audio version now, which is awesome for the feed truck or the tractor, whatever you might be doing. So thank you for listening, and we will see you in the next episode.
So glad you leaned in with us on the Win A podcast. We truly hope you're feeling more informed and empowered to take another step towards optimizing your financial life. Right now, make sure you hit subscribe so you can keep growing and learning with us. Until next time, we wish you prosperity in every area of your life.